Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Koh, founder of the Smart Investor in Singapore. Great, David, as always, nice to have you on the show this Wednesday.
Well, thank you so much. Yeah, it's very disturbing times for people at the moment. So hopefully I can spread a little bit of cheer and maybe a little bit of sense as to what is going on in the markets, Brian.
Well, and also as long as you can help them make money, David, they will be very happy. Now, let's start with taking a look at how cryptocurrencies have been performing. Now, Bitcoin has been resurgent in the last few days. It's now at 40,258. It's up 0.62%. Ethereum is at 2,530.42. It's down 0.39%. Now, over across to the regional exchanges, we've got the SGX, which is at 3,152.65. It's down 0.7%. Bursa Malaysia is at 1,582.78. It's up 0.09%. Across the region, we've got the Nikkei, which is at 29,312.31. It's down 0.44%. The Shanghai Composite is at 3,529.11. It's down 0.77%. The Hang Seng is down 0.23% at 28,573.35. The ASX 200 is pretty flat at 7,385.8. It's up 0.09%. Rounding off the numbers, we've got the Kospi, which is up 0.55% at 3,276.3. David, pretty mixed market performance across the region. Tell us why.
Well, I think everybody is treading water at the moment, Brian. I know you don't want to talk about this topic because everybody is talking about this topic, but I don't think we can ignore this topic completely. It is the elephant in the room. It is the Fed meeting. And I think everybody is just waiting to see what the Federal Reserve is going to do. Are they going to ignore inflation? How long can he say that inflation is only transitory when month after month and data point after data point seems to indicate that inflation is there? I mean, can he keep on sort of saying that we don't want to talk about it because it is transitory? And I know it is a very divisive topic, simply because you have one camp that says that, yeah, sure, you know, there is inflation out there because we've just recovered from, or we are recovering from COVID-19. And so the supply chains are not in place at the moment. And consequently, prices have to go up because there is a shortage of supply. Then on the other hand, you have people saying, oh, you know, it's because of this flood of money that the Fed and the other central banks have pumped in, and it's causing inflationary pressures. So only time will tell who is going to be correct, Brian.
Yeah, and speaking of data points, we had Japanese export numbers this morning, and it rose 49.6% from a year earlier. Obviously, that's from a much lower base. Now, this was lower than the 51.3% increase, which was forecast by economists in the Reuters poll. So we're getting mixed signals here and there across the region in terms of how strong this recovery really is. But what I want to zoom on to, David, is just the UK. Now, the UK has just agreed to a post-Brexit free trade deal with Australia. So it's got to reinvent itself, and this is part of the strategy. What's your view on this?
One word describes it very well, Brian, and it's meh. Ultimately, what I'm saying is that it is very important for Boris Johnson. It is also very important to the Australian Prime Minister, simply because in the case of Australia, they're having some problems with China, which is one of its biggest trading partners. In the case of the UK, it has left Brexit, and it is trying to show the rest of the world that Britain is open for business, and they want to strike as many free trade deals as possible. In other words, eliminate any kind of trade tariffs, just to show that it can be done. Now, when you have a look at really what is at stake, it is measured in probably the mid hundreds of millions of dollars. Seems like an awful lot of money, but when you consider that the trade between the two countries is measured in the billions of dollars.
That's right. It's about 13.9 billion pounds, the trade between both of them per year.
Okay, so you cut tariffs, and how is that going to affect things? Probably very little. But if you zoom in on certain industries that might benefit from this, in the case of Australia, maybe the farmers will be able to send their beef and their sheep, their
And
mutton
wine.
over to the
Yeah.
and their wine to the UK. I mean, obviously, uh, Australia needs a market for its wine at the moment because it was so dependent on China
China.
buying its
Yeah.
wine, and so that'll be very good. I think particularly for the consumers in the UK to be able to get hold of finally things like Jacob's Creek and Hardy's and those kind of wines, which were really bought up in bulk by the Chinese consumers. But now, the rest of the world will be able to get hold of that. And also, things like, as I said, beef and lamb will be able to ship to the UK. And in the case of the UK, distillers will be able to ship their whiskey, scotch, over to Australia tax-free. So that'll be good for companies like Diageo, which I have got shares in. So I think it is really optics rather than economics that will frame this trade deal between Australia and the UK. Ultimately, Boris Johnson is trying to show the world that we are open, and if anybody wants to strike trade deals with us, please come along and we'll go through it and we'll sign on the dotted line.
Now, David, you mentioned Diageo. You're a long-term investor. Which Australian and UK stocks in your portfolio do you think will benefit from this besides Diageo?
Okay, I don't really have that many Australian stocks. In fact, I don't have any Australian stocks in my portfolio at all. I mean, when you think of Australia, the one thing that you always lean towards is things that come out of the ground. Australia is very good at digging, right? So, yes. So it digs things like aluminium and iron and copper and all those kind of minerals that come out of the ground. So when you look at Australia, ultimately, if the global economy is going to reopen, then you're going to have a look at those miners and say that are miners a good investment? And the thing that I was taught,
your BHPs, your Rio Tintos,
for sure,
as an example.
Yeah, I mean, those are the kind of companies. And I remember when I was first looking at the mining industry some 20 years ago, and I was scratching my head and I was talking to a mining analyst who was working within the team. I said, how do you actually sort of make sense of miners? And he said, you have to be a long-term investor with mining stocks. In other words, it will go through cycles, economic cycles. They will have their good times, they will have their bad times. But ultimately, when you are looking at mining companies, they are price takers. They don't really have any control over the price at which they sell their iron ore or their bauxite or whatever they dig out from the ground. It is the going price at the moment. A bit like where you are in Malaysia. When palm oil prices are good, then the palm oil farmers will make a lot of money. When palm oil prices are down, they will suffer. But I mean, it is a cycle. But that cycle, interestingly, when you have a look at the mining companies in Australia, is that it does go from the bottom left to the top right. In other words, it does go up over time, as long as you are able to tolerate those cycles, Brian.
So any other sector that you think will benefit from this?
Probably the banking sector will benefit because ultimately when people need to do trade deals, they need to go through the banks. So have a look at the Australian banks. They haven't done particularly well recently, but I think the banking sector, not just in Australia, Brian, I think the banking sector all over the world will benefit. Throughout the whole of last year, 2020, I was filling my boots with banks and not just European banks, but Malaysian banks. I quite like the looks of Maybank at the moment. And when you have a look at Maybank, its price to book is about just over 1, and the dividend yield looks attractive. So banks, have a look at Australian banks, really. I mean, seriously, just have a look at banks. And I think as the economy starts to open up, and with this trade deal, it is showing that there are going to be lots of trade deals being struck around the world. And if that were to happen, then I think banks will be able to recover very strongly and make lots of money for you, Brian.
David, as always, thank you very much for your sagely advice.
You're welcome. Thank you. And just be a long-term investor. That's all I can say.
Now, we've been speaking to David Koh, the founder of the Smart Investor from Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.